Welcome to the program. Great to have you on, and thanks for weighing in on this conversation. I wanted to begin with the escalation that we've seen in the Middle East, though, of course, you've been following this from Milan as well. Israel just bombing inside Qatar, Russia also sending drones into Polish airspace. Why would you say oil prices are still relatively calm in this moment?
Good morning, Dan. Well, what happened yesterday, I think, sent a shockwave across everybody. Whoever I was talking to yesterday, I mean, they were in disbelief that this happened, particularly the attack on Qatari soil, in addition to what happened in Poland. Now, you may say that on the geopolitical side, we have a serious escalation of the situation. Yet, when you look at energy prices, oil prices in particular, we don't see much of a panic. Actually, I would say that the markets kept their cool. And because you see, this has been happening now for a while. We see that prices have been range bound, and they are moving, let's say, between the 60s and the 70s at max. But they react to news, to geopolitical news. Whenever, for example, there were talks in Ukraine, we saw downward pressure. Then when there are tensions, upward pressure. But really, we did not move too much or too far away from that range that we have seen now for several months. And it's likely to stay with us unless we see some changes to the market fundamentals. And this is where I'm going to talk about the supply. We all know there has not been any supply disruptions today, despite the escalation. What will happen next is a big question mark, especially on the Russian side. You do have OPEC. I think what they did was the release of their the voluntary cuts earlier in the summer, and now they are adding to it. That helped a lot. So they did not crash the prices, they did not crash the market, but that helped to stabilize prices to the levels that we are seeing today. You also have on the demand side, we're not seeing demand booming. We still have fundamental economic problems that are slowing down the growth in demand, particularly in China and the rest of the world, with the tariffs, of course. And most importantly, there is the spare capacity. I heard in the interview the reference to the spare capacity, which is very important. It acts as a cushion against geopolitical tension. Now, that's the good news. The bad news is that the more barrels OPEC releases, the thinner that spare capacity is going to become. And this is where, if market fundamentals change with a thinner spare capacity, then we are likely to see the geopolitical premium more pronounced in prices, and probably going to see the spikes getting bigger and maybe lasting longer. So when it comes to the geopolitical risk and its impact on markets, I always like to take consideration not just the market fundamentals, but also how much spare capacity we have in the system. And that's what we should keep in check.
Carole, you make an excellent point. Just on spare capacity, of course, you mentioned OPEC Plus has been adding barrels. Each new addition cuts into that spare capacity, as you say. So shouldn't that raise the risk premium for oil?
It should, but not yet. So because you do have the weaker fundamentals, the weaker growth in demand, and there's plenty of supply already in the market. However, if I see, for example, tougher sanctions on Russia, secondary sanctions, and we heard already it was reported that President Trump is putting pressure on the EU to increase tariffs on the main buyers of Russian oil, China and India, by 100%. That could squeeze Russian oil from its main markets that is in Asia. So far, the Indian did not give in to President Trump increase in tariff and the additional threats that he made. But that might change if the EU joins forces with the Americans. So the secondary sanction on Russia, tougher imposition of sanctions on Iran, they can have a bigger impact on the supply side. And in addition to a thinner spare capacity, that could put upward pressure on prices. But for me, at the moment, I'm not too worried about that aspect, because these are all fears, and we still have plenty of supply in the market with a not so strong, not booming demand that keeps things a little bit calm and keeps prices within the range that we have seen in the last few months.